Today, Ether climbs to start the week. Crypto exchange Kraken is expanding into a new asset class, stocks, and Andy Baehr with CoinDesk Indices weighs in on why crypto has held up pretty well amid the recent market turmoil. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices kicking off the week in the green. At noon Eastern, Bitcoin traded pretty flat at $84,000. Ether climbed more than 2.5%, and Binance's BNB token climbed slightly after the Wall Street Journal reported executives from the crypto exchange met with Treasury Department officials last month and discussed easing U.S. government oversight over the firm. The moves higher come after National Economic Council Director Kevin Hassett said this morning that more than 10 countries brought, quote, amazing trade deal offers to the U.S. after President Trump imposed steep tariffs on imports from many nations. Crypto-focused stocks are mixed as of around midday, along with major indexes. Coinbase and Riot falling more than 1%, while Strategy climbed more than 1%, and Marathon jumped 2.5%. Last week, Bitcoin held up relatively well as the broader market took a wild roller coaster ride. Investors were quick to point out Bitcoin's resilience in a week filled with tariff-related headlines, especially compared to the big swings in the major stock indexes, something traders are more accustomed to seeing in crypto. All right, let's talk about the top stories. A crypto token tied to real-world asset tokenization project Mantra rapidly lost 90% of its value yesterday. OM token, issued by Mantra, had a market cap of around $6 billion early Sunday, but ended the day at around $730 million, according to data from CoinMarketCap. In the aftermath, Mantra took to X, claiming the activity was, quote, triggered by reckless liquidations, and claimed its team wasn't the one behind the sell-off. In a separate post, co-founder and CEO JP Mullen blamed the market moves on, quote, forced closures initiated by centralized exchanges, but no specific exchanges were named in the post. Next, Kraken's moving beyond crypto. The company announced that it's entering a new asset class, stocks. Kraken says it launched the initial rollout of commission-free trading for more than 11,000 US-listed equities and ETFs, and the goal is to bring stocks and crypto together in one trading platform. Now, starting today, US-based clients in several states, including New Jersey, Connecticut, and Wyoming, can trade stocks and ETFs directly within their Kraken account, and the plan is to expand access to clients in more states in the near future, followed by international markets like Europe and Australia. In a statement, Kraken's co-CEO said moving into equities is a, quote, natural step for the company and paves the way for the tokenization of assets. Kraken and other crypto firms have been looking to expand their businesses into TradFi spaces amid the Trump administration's promise of a more friendly environment for crypto. All right, turning back to markets for our main story as we kick off another week of developments related to tariffs and the global economy. I spoke with Andy Baehr, managing director of CoinDesk Indices, for his take on Bitcoin's relative stability amid broader investor uncertainty. All right, Andy, thank you for being here. I have to start with the tariffs. I mean, we got more news of exemptions for big ticket items like phones and computers over the weekend, and that seemed to give crypto a boost over the weekend. We're back somewhere around the mid-80s for Bitcoin. That being said, though, Bitcoin has been relatively resilient compared to the huge losses on Wall Street in the wake of these tariffs. What's sort of behind that resiliency, and are investors properly pricing in the fact that most of these tariffs are paused, not gone altogether?
I think it's been very difficult to price anything in traditional markets and very difficult to navigate them over the last week. I think last week's equity market, for example, if you're a long-only portfolio manager, even with the best intentions to hedge, it was pretty much an unhedgeable market, right? Volatility was all over the place. The VIX got to 50. And then you had these whipsaw movements that were caused by social media posts and then exacerbated by high-frequency trading. So very, very difficult. And of course, that traditional safe haven of going into U.S. Treasuries completely didn't work. And so it's a very difficult market. As you pointed out, Bitcoin kind of skated through and was up about 5-6% on the week. Even the moments when Bitcoin's price performance was low, people noted lows of 75,000. A lot of those represented liquidations of futures, which is not uncommon in the market. Those can create sort of the bottom wicks of candles, for chart watchers, but they don't really necessarily represent where the fair market price is. So if you kind of take those temporary gyrations out of the picture, Bitcoin was super smooth last week.
You mentioned a lot there that I want to cover from treasuries and so on. But before we go on, I feel like we should say, one of the points I've seen you make is this differentiation between Bitcoin as a safe haven and as a store of value. And that's something that you say some have gotten wrong in this period of uncertainty we're in. So walk me through the difference as you see it and where Bitcoin is right now.
Absolutely. Yeah. And I'm not, feel like this is something of a crusade, that a safe haven asset is something that is associated with flight to quality behavior for investors. So when markets get super turbulent in a very short period of time, what exit are you running towards? Bitcoin as an adolescent aged asset is a little bit young and has a little bit insufficient access to traditional market liquidity like banking to really be able to be thought of as a flight to quality. It's too new. It's too, early in its adoption phase to do that. Although last week's behavior certainly suggests it was a safe place to be. So a safe haven flight to quality asset should be US Treasuries. Again, didn't work out that way last week. The store of value concept is really much longer time horizon. Where am I going to think about putting money if I feel like over the next quarter or year or 2 years, the US dollar will weaken or will suffer inflation? Where can I think about storing something in an area that's going to be free of government intervention and has a network effect that's growing, and also that somewhat represents the future? So gold has been very successful fulfilling that task, even, not only last week, but just generally this year. But gold doesn't have as much of a future as Bitcoin does. And it also has these kind of, the physical restraints of movement and storage and things like that. So we are very much supportive of the store of value. Last week, actually, Bitcoin was a bit of a safe haven as well. I think that's just the way that things rolled out. So we like to keep those separate. Ultimately, Bitcoin should be a safe haven asset just as it matures some more.
I want to follow up on the treasuries conversation, because I'm trying to wrap my head around what's going on there and what it means for crypto. Obviously, we've had this spike in treasury yields, and there have been some who've been concerned that it could lead to real financial stress. And I guess I'm trying to understand how that factors into crypto, particularly because a lot of stable coins have reserves backed in part by short-term treasuries. Are you watching any impact there? And I guess secondarily, does it have any impact on things outside of stable coins like Bitcoin?
Yeah, I think stablecoins should, if they're, I don't have complete transparency into the assets that back stablecoins, but they should be very, very short duration instruments, right? A lot of the gyrations we saw were in the 5 to 10 year space. And of course, I think it's pretty fair to say that those price reactions were counter to the objectives of the administration to try to keep interest rates lower. So, folks who owned a lot of 10-year treasuries were selling them last week, whether that was an offensive or a defensive move, and that made yields go higher. So, no, we haven't seen any impact on stablecoins. Stablecoins have reached this kind of really nice $250 billion level of TVL. This represents a lot of money that even when it's on the sidelines in crypto, it's not off-ramping into fiat. Very encouraging for the trading environment and the investment environment. And of course, now there's, $4 to $5 billion of tokenized interest-bearing funds, usually money market or very short-dated treasury funds that are used for things like yield enhancement and collateral enhancement. Those have seemed pretty stable as well. So keeping durations very, very short, while still retaining some yield properties, both for stable coins and tokenized money market funds, so far hasn't shown any signs of stress, and we hope it'll stay that way.
Another big ticket item we're watching is consumer sentiment. We got that read from the University of Michigan on Friday. Consumer sentiment falling around 7 points. Inflation expectations at their highest level since the early 80s. What does that mean for Bitcoin?
So let's look back. You had Dallas, Dynasty, Dukes of Hazzard. These were the TV shows that were, number one shows in 1981. Let's Get Physical, Olivia Newton-John. Like, that's how far back we're going when consumers were predicting that the next 1 year of inflation would be 6.7%. When we like to think about Bitcoin's core valuation or its demand function being built on the expectation for future real interest rates. So that's nominal rates minus inflation. Now, what have we seen? We've seen from that consumer sentiment survey, 6.7% predicted 1 year inflation, highest in decades. We also saw that the consumers expect higher unemployment. The higher unemployment can be conceived as a prompt for the Federal Reserve to ease interest rates. So if the Fed eases interest rates because of high unemployment, yet inflation's quite high, you have basically the lowest expected future real interest rates possible. That makes Bitcoin look pretty attractive when you think about its denominator in its trading form, US dollars. So we think it's a particularly good time to use that kind of argument to suggest that Bitcoin is a thing to allocate towards, not necessarily to trade. You trade based on your trading instinct, but the allocation story kind of makes as much sense as it has. Then when you look again at the gyrations and the fragility of traditional assets, the case becomes even clearer. So I think it's actually been a pretty important week for potential Bitcoin adoption. And of course, we talk about, you and I have talked about before, the CoinDesk 20 index is a broad-based, sort of representation of the asset class. We feel that those correlations would stay strong, and other assets will follow along, will follow Bitcoin's lead, as it usually does in these uptrend conditions.
All right, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.